Surprise, surprise. Happy Saturday, everybody. I want to do a quick Bitcoin breakdown for everybody. Crypto Rolly here. I do live technical analysis, price predictions, and trading. Remember, these are my own ideas and opinions on the market, so please do your own research. Trade at your own risk. Hit that like, subscribe, tick the bell for notifications, leave me a comment. Let's talk about it. All right, let's go to the market. Bitcoin slightly down. We see the volume has dropped beneath a billion, about 900 million. This is typical of the weekend for the volume to slow down. We have been seeing Bitcoin droop, slightly fall, kind of like a slow bleed. Do we have the volume on the weekend to push this further, or do we end up bouncing or just continue to trade sideways? We'll take a look at the indicators there, and we can see slight losses across the board. Tether up slightly. People are moving out of crypto, putting it into a stable coin, but these things can change very quickly. Crypto Fear and Greed Index 54, neutral. We're still waiting. 50-50. Who's going to win? The bears or the bulls? Are we going to finally break out, retest higher levels, close at 11.8K CME gap? We do have the CME close this weekend. We'll look at that as well. The 14K top in 2019, 20K, will we break above? Or is this just another failed rally? Will the bears punish us once again? So that's what the argument is, right? All right, so let's take a look at the charts. So Bitcoin, we've been looking at this chart here. I went ahead, I've removed that diagonal there just because I wanted to clean up my chart a little bit. And we all know we've been pushing on that diagonal basically from this top here to the bottom there. You can adjust this. Are you using the wicks or the candle bodies? But we all know diagonals are not as important as horizontals. So we've been looking at a resistance box, a support box. In between here, to me, is just more consolidation, opportunity for dollar cost averaging if you're a long-term investor. Up here, above here, bull market, bull run is on and popping. Below, you're going to see death of Bitcoin articles coming out. We could say that. So basically this level here, 10.5 is the level to beat to the top. And then I would say around 67 to 6,800 to the downside. And then I've gone ahead and drawn a new trend line. We can keep drawing these. And I'm using from this here, 1 touch, 2, 3, 4 touches. So you need 3 touches to confirm, a trend line. And so we have more than 3. We have about 4 and looking at a possible 5th one. So will we end up bouncing here? Do we come down to retest and bounce? Or maybe we, go sideways and then bounce off of it? Or we lose it, okay? This resistance box spans from 9,400 to 10.5 using that previous price history that I've been showing back here. And so we're still above that 9,400. We're in the box, but we all knew it was going to be a difficult region to break. So we're watching that trend line there for you guys, okay? So moving on, let's take a look at the CME because CME did close on Friday, and it will reopen tomorrow. Price has dropped a little bit, so at current price, we will have a gap above. Now, price closed on the daily right here around 9,800 CME price. Usually there's a little discrepancy between CME and spot like Bitstamp, Coinbase, even BitMEX. You're going to have that discrepancy between CME and those exchanges that most retail people use. So you have to accommodate that. So if you have 9,800 here, basically you have to wait for Sunday, wait for the CME to open. So when it opens and you see, say the price on Bitcoin is 9,600 and the price on CME is 9,700, you know that there's going to be $100 discrepancy that you need to be aware of when you're calculating where the gap on CME is going to be on Bitcoin, okay? So I hope that made sense. But basically, we closed around 9,800 right there on CME. Let's see where that was on Bitcoin on the daily, that's going to be right around that region there. So if we end up dropping, you're going to have a gap all up in there in that region, okay? So otherwise, maybe we come up and there's no gap by tomorrow. That's a possibility too. Sometimes you'll see a movement, whether it's up or down, and then by the time CME opens, we've already retraced back to the same price that we started from. Also, one of the options that we have. But going back to the CME, I did want to point out that I have, I've drawn a bit of a trend line here. I only have well, actually, I can extend it there. So you have the same similar type of trend line that we saw on Bitcoin. You have 1 touch, 2 touch, 3 touches. So my point is, if we do fall, I think there's a strong possibility that we still maintain above this support line. So maybe we open down beneath it. There's a gap above, but it'll be interesting to see if there's a gap above, do we open above or below this rising support line? If we open below that support line, losing this uptrend, we could still fill the gap, but we might just have a wick. It could wick up to fill the gap, and then we'll see it come back down. And then if the candle body closes back beneath it after the wick up and closes back beneath it, you could have a downtrend begin there. All right. But otherwise, we are looking at a bit of an ascending triangle almost. It's not perfect, but, and I was looking at this kind of on Bitcoin too. It's not exactly perfect, but you still can kind of see that it's mostly a horizontal top. 10K really is that horizontal top, and then you have an ascending trend. So we're getting to the apex. We're getting pretty close. We're going to have to make up our mind there. Now, I wanted to point out this trend line on the CME, and this is all relevant considering it's the weekend and, the CME will open back tomorrow. We had a similar situation, a little different, but back here we had a trend line on the CME. You had a support line there as well. And this candle, if you go to a 4-hour, you can see it. Excuse me. We'll drag it over here. So you can see you had that there. All right. So you had this rising trend line. CME opened up. Actually, it's very similar. CME opened up beneath that trend line. And we came up, and in this instance, it didn't immediately fill it with that wick type scenario coming back down, like it didn't go up, wick back down, the scenario that I talked about. But in this scenario, it continued down a little bit more. It ended up rising, filling the gap at the top of that diagonal, but never really crossing that trend line. So this was a support line flipped as resistance. So it was able to fill it, but then get rejected as at the same time and then continue down. So are we going to see something similar? And that all depends on what happens before tomorrow. So either, we could just end up closing here with no gap, maybe a miracle. We pump over the weekend and then have a gap beneath, or we fall, but, stick around 9,400, 9,500, and we end up opening inside above that support line. Or we could do something similar there as well, where you open beneath it, you come down, and then you come up to fill the gap, get rejected right there, and then come down. Possibilities. And the benefit of doing this is also to understand how these rising support lines can flip as resistance. And you saw that in the example before. All right, I felt like that was a good educational CME talk right there. All right, what do I got next? Let's go over to the Bitcoin chart. Smash the like if you haven't smashed the like before. We can look at my Bitstamp chart. These are some critical horizontal levels. We've been looking at 10.5, same as that resistance box on my Coinbase chart we started off with. 9,800 has been a critical level with the daily. The daily's had a hard time closing above. I did it again. I always forget to get off the paint tool when I use it. All right, so 9,800, we weren't able to close above 9,800 on the daily there, and again here. So are we going to get rejected and come back down to the bottom of this range? You can see we had a bit of a range there with 9,200. We wicked off of it here as well. So to the downside, you do have 9,200 as a level of interest. We have some moving averages that are holding price up here as well that I'll get into in just a moment. And I went ahead and have drawn a new trend line using the wicks here just to give it more room. Using the candle bodies can be very accurate, especially with horizontals, and you can use them with diagonals, but sometimes you see them get violated and you end up adjusting it using the wicks. So we'll go ahead and just start with the wicks here. So if that's the case and we come down to 9,200, you could bounce around and then bounce off of it down here even, and that would just prolong this sideways consolidation. We've talked about how this sideways could go on into June, July, and it's already beginning of June. And if you came to the apex here, that's just the end of June. We were looking at, earlier we were looking at a possible descending triangle formation that could have lasted much further into July if you had that descending, but that was clearly broke. So we're not looking at a descending triangle formation there. Okay, so that's the critical horizontals, and then your 10K. We were rejected at 10K there, so you need to close it daily over 9,800, and 10K would be good too. All right, and that's just a psychological number, but we saw how it came into play there. Real quick, while it's on my mind, yesterday I talked about gold and stocks, and I think we argue, is Bitcoin tied more closely to gold or is it tied more closely to stocks? And I've seen it act differently. I've seen Bitcoin move with the gold, with the Iran conflict, and right after the pandemic, on whenever Wall Street was open, Bitcoin was moving directly with it as well. And we've moved away from that, but I think the general argument is that Bitcoin is a risk-on asset, and equities in the stock market is a risk-on asset as well, and gold is a safe haven, right? And basically this article here is just like stimulus, who needs safe havens? So basically, why do we need gold, to protect us if the Fed keeps printing money, if they keep just, bailing everybody out, if all these companies are just going to get bailed out, equities can still be a good place to put your money. And we've seen the stock market bounce back pretty well. But what I failed to notice yesterday, and I was looking at this a little more deeper on the gold chart, gold actually also had a pretty large sell-off at the same time. When the pandemic started, the pandemic sell-off started, and you saw basically assets across the board. The stocks fell, Bitcoin fell, gold fell very hard as well. But gold, so they all got hit at the same time there, but gold bounced the fastest. Gold was the first one to bounce, and it bounced back above its previous high. It's made new highs, and now with the stock market performing better, we've seen it fall off, because I think there's more of a indirect correlation between gold and stocks. I think there is a correlation, and it's reversed. So if the stock market's doing well, gold might suffer, and if the stock market looks like it's going to continue to sell off, maybe go into a bear market, gold will increase. And but my point here is it sold off and bounced first, and then Bitcoin also sold off hard with everything. It bounced, but it got to its basically retracement level. It came all the way to where we started the sell-off way before the stock market did. So gold went first. It recovered from the sell-off. Bitcoin was the next. And now the stock market is just now getting to that point. Hasn't even retraced the whole point. But, so basically gold went first. Bitcoin went next, started stalling. Stock markets are catching up. Gold is starting to fall. Bitcoin's going sideways. So will Bitcoin actually be the next to fall? And then the stock market may have a pullback at some point here. And then the stock market. I'm throwing these ideas out there. Tell me what you guys think in the comments there. we're at this critical level. So if we get rejected here, it won't be a surprise. It will be a bit disheartening for those Bitcoin hodlers that have been, trading this market for the past 2 years. But you know what, guys? I'll show you the indicators why I don't think we're too bearish yet. And, the fact that we've been sticking around here, we're still putting in higher highs on the day. Higher highs. We do have higher highs on this trend, and we still have higher lows on this trend. I'm still not bearish. Even if we come back down to 9,200, bounce off of this trend line, we're still putting in higher lows. It just might take a little more time to finally break that level. It took quite some time to break that 6K level in 2018. We just kept banging up against it, to the point where it finally broke. It might be something similar where we just have to keep banging up against this 10K, 10.5K till it finally breaks. All right. Whew. Yeah, man. Why be bearish? You start putting in a lower low, then we can get more bearish. All right. So throwing out a lot of ideas so that you guys can form your own opinions as well there. On a lower quick time frame here, I'll start with the lower time frame, move my way out. I'm looking at basically this you could say descending triangle here. They don't have to always break down. They typically do, but not always. I've seen them break every direction. But more importantly, you have a horizontal support and a descending trend line of resistance. So if the 4-hour closes below, this is 9,600, you could see continuation down, but with the lack of volume on the weekend, it might just be a wick, okay? And to the other side, if you finally break this downtrend on the 4-hour, get above that peak there, maybe we retest 9,800, definitely a possibility. And if you throw on your moving averages, you can see your moving averages basically are drawing that same downtrend resistance that I have with my drawing tools and horizontal support. Your 50 EMA, orange 50 EMA on the 4 hours, 9,600, same as that horizontal, and your blue 10 simple is holding us down here at 9,670. Same with the yellow 21 EMA, so 9,670 to the upside. So a close beyond that level or that level for the next short-term direction. If we do fall from 9,600, you have the red 100 EMA at 9,472. And that would still be maintaining your higher lows. You could even come down to the 200 EMA on the 4-hour around 91.82, and you would still be putting in higher lows. So these are the levels to be aware of. I would say let's go 94.72, 93.55. That's your 200 simple, and then your 200 EMA at 91.82, one level at a time. All right. So that's our moving averages. And then looking at our stochastics, your slow moving stoch is still coming down. Your fast moving stoch did get a little bit of a bounce and hinting at cross down. We'll have to see how this 4-hour closes. If we do see a bounce, this could easily straighten out. This hasn't confirmed yet, and this will be lagging behind that one. Otherwise, you get that break beneath 9,600, this will curl back down and you'll continue this way. This one, the slow moving is once you get that actual cross on the slow moving, it's going to be a better confirmation. So you could continue further down. We could see more downside and then finally get that curve and then a cross to the upside on the 4-hour. Your RSI is still very neutral, pointing down, but this could easily turn back up depending on how the price moves. Depending on what the whales want to do today. Let's go to the 12-hour. On the 12-hour, we're still above the yellow 21 EMA support, 95.84. So, sometimes that's something to be aware of too. If you're not looking at your other time frames, you say, that 4-hour beneath 9,600, but then if you go over here, that hasn't really violated your 12-hour 21 EMA. So which one is going to be more important? Okay, maybe the 4-hour will trigger a downside and then you end up getting a bounce back up and you never close a 12-hour under the 21 EMA. So that's why, these are good for giving you support and resistance levels and can be used but aren't perfect. You can get faked out. To the downside support, 93.58 is the 50 EMA there. Our stochastics turned down on the fast moving and haven't confirmed a cross up on the slow moving. So that momentum's definitely looking like it wants to come down. But anything can happen and you're still sitting on support. So until you break that support, you're always at risk at turning, reversing, going the other direction. Okay, especially right here, you would have been thinking something similar there, I'm sure, and you ended up getting a big pump there. So as long as you're above support, you can't be too bearish. Neutral RSI as well. On the daily, you're above your 21 EMA as well. We are beneath the 10 simple. 96.57 could provide some resistance. 94.33 yellow 21 EMA on the daily, so you're still above that level as well. Being above the 21 EMA is typically bullish as well. And your daily fast stoch was looking for a cross down, but kind of hinting back down, and your slow moving still coming down. So looking at those time frames, they all look pretty similar, mostly to the downside, above support. So could we get a flip at some point? You might want to wait for those actual confirmations. All right, going to the weekly. On the weekly, let's look at the weekly here. The weekly, you're above all moving averages. Your blue 10 simple looking to get a bullish cross above the 21 EMA as long as we close at this level or higher. We did want to see the weekly candle close above this close, 96.65. We're at 96.22. So if Bitcoin could bounce, I like how we say we, as if I'm Team Bull Bitcoin. At the moment, I kind of am. If we would lose these levels, I might be put my bear hat on, but I haven't put that on yet. And so basically, you could get another bullish cross there. We do want to see if this weekly candle closes above that candle body high at 96.65. If it gets a close over there, we could see more continuation to the upside. Otherwise, this is a bit of a indecision doji candle, but still a green one as we stand today. We'll have to see how that closes tomorrow. Weekly stochs coming down on your fast and getting pretty high on the slow. So if we do get that downside, this could come back down this way, but you're not even hinting the cross yet on the weekly, which coincides with that green candle. Now, if this turns out to be a red bearish candle, maybe we'll see that hint. And then if you lose the 21 EMA on the weekly, I'll become more bearish, but above the 21 EMA, bull market, beneath it, bear market, and we've been above it and maintaining above it, which we were doing back here for some time, but we had the pandemic, and we've completely bounced back from the pandemic, and here we are back at the same price. So I think it's fair to say that there's definitely a good possibility we can break higher. However, there's been a lot of activity all over the United States with the protest and lots of gatherings, thousands and thousands of people every day in every major city, even small cities. You've seen it in London, you've seen it in Paris, you've seen it in Canada. So I don't know, is there going to be a wave 2? If there was going to be a wave 2, this would be the most likely trigger, these mass gatherings. So we'll have to see. Time will tell, and hopefully, honestly, if the world was a perfect place, which we know it's not, maybe we don't see another wave 2 and everything's good in the world and we can march higher. But if we get a wave 2 and we get a second lockdown, you could see the stock market finally get a pullback here, and if it's a harsh pullback, something like that, we could see other markets like Bitcoin drop with it. So that's the real threat to me about Bitcoin. It's not the chart, it's the global situation. All right, thanks again for watching, and we will see you next time. Rolly roll.